Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the stock market. As always, please don't use these for trading purposes. They're for information only. Starting here with the weekly chart of the S&P 500, going back to 2021, 2022 there, we had a bit of a bear market as the Federal Reserve started to raise interest rates. But after that, steadied. We had a nice rally there through 23, 24. A little bit of a rough start to 25 for sure. A very steep little instant bear market there that resolved itself to all-time highs. Now we're coming up, and as you can see here, kind of stalled out certainly over the last few weeks, and I'll talk more about that. But certainly still in an uptrend, and as long as we're holding, I put up a couple of support points that we might see the market bouncing, and you can see this 6,800 number. We bounced off it a couple of times here, so we do have a bit of a trading range going on, a sideways market. Go down here in a little more detail to our daily chart, and you can see that since probably October, the market's gone nowhere. It's just sitting here in a range back and forth. It's tried to punch through this 7,000 number several times, and it's not been successful. But the same way, 6,800 keeps holding up every time we go down and do that. So really unresolved and sideways yet. So we've had a really, really, really long run there, nice off the bottom. So might be a good time to at least play a little bit of defense or look elsewhere. Certainly, international has had a great year last year, and the valuations are much cheaper in the international market. But U.S. still holding up here. We're in a trading range, a sideways market. We come down here to the 2-hour chart. You see it in more detail. How the last few months, as I said, we've just been going sideways, and you can just see that keeps bouncing back and forth, hitting these levels. Really not much to see there. If we look inside the market at some of the internal measures, and here, this is the percentage of the S&P 500 that's in an uptrend, and it helps us to determine whether it's just a few stocks are really rallying and dragging that up. Not everybody realizes that the S&P 500 is market cap weighted, meaning the bigger stocks are a bigger percentage of the 500. So we are in a situation where 6, 7 stocks are basically 25% of the entire market. When you see that and the number of the stocks in an uptrend is much lower, you know that only a few stocks are really holding that up. We're at all-time highs here, and you're at 59%. That's not really great. You're basically saying that only half of the stocks in the S&P 500 are participating in that uptrend. So that's not great. And as you can see here, it's kind of weakening as we're going sideways. We had been up about 67, we're down 59. The next one down, this is the advanced decline line on the New York Stock Exchange, and this tells us, how many advancing stocks divided by declining stocks, and then it just adds up every day. Give you a trend of how much money is flowing into the market, rising these stocks. It's been kind of flat here, kind of like the price action, so maybe not much to see there. Then we have the VIX, the volatility index here. This is the price that people are willing to pay for options contracts that will protect their portfolio. It's sitting up about 20, which is actually, a little higher than you want to see at an all-time high. So people getting a little maybe anxious, wanting to hedge their portfolios in case we do have a fall here. Then finally, at the bottom, I put a chart. This is the ratio of the S&P 500 to the VIX. The VIX, and this will tell you you'd want to see that. You'd want to see the stock market outperforming the volatility index, which says, hey, there's bad times to come. And when you're seeing it fall like that, when you're in a sideways range, it's not the best signal. So I'd be watching very carefully here that the market certainly could do a little breaking down. And if you step back and look at the big picture, here off of the 2023 lows, look at that run. We came all the way up from 4,000 to 7,000. You're getting close to doubling there in just a space of 3 years. So we've had quite a run. It's very expensive, so I wouldn't discount that we could have a nice little correction at some point here. Let's see, we did that chart. Come back to 2-hour. like to look at some of the inside the market, which kind of stocks are doing better. This first one, this is a ratio of consumer discretionary stocks. So things that would do well, like cars or vacations, all the things that people buy when they're healthy, and relative to staples, which is just the things that we need to buy, the toothpaste and deodorant and things that no matter what the economy, we're going to buy anyway. And as you can see, that's starting to fall here in the last couple of months. So as the market's at all-time highs and going sideways, definitely move towards more conservative stocks here. This is another version of the same chart. To here, technology stocks relative to utility stocks, same thing. In a rallying bull market, you would want to see this moving higher as you did earlier in the year there. This is now starting to move lower. Biotech versus healthcare, same thing, although that one's more sideways, not really much of an indication. And then this last one is hotels versus utilities. This is actually saying the opposite. Like the hotels are actually doing quite well in this environment yet. So maybe a mixed bag there. But I think being at all-time highs and having the volatility index starting to peak up, and consumer discretionary stocks are underperforming staples. I am very concerned about what's going to happen next, and we'll have my finger on the trigger as far as playing defense. And I actually am already playing a little bit of defense right now. We look here at interest rates. Gone through this one before. For several years, we've just been stuck in this 4% between 5 here on the upside and 3.5. The U.S. 10-year Treasury has just been sitting right in that range, so nothing really moving around there. Let's look at our economic indicators. If we look at GDP growth rate right around 4, the last and the previous, those are good numbers actually. That's good. The payroll numbers, they're still positive, 130,000 there, 48 on the previous reading. That's good, but not anything to write home about. And finally, retail sales. These are not good. The last reading had been 0.6, and this most recent one was flat. It's at 0. So little slowdown there with things. Like I said, I'm seeing plenty to say, a good time to maybe just be a little conservative or look out that we could have a bit of a correction start. It wouldn't be surprising. Hasn't started yet. I don't want to ring the alarm bells, but I'd be looking that that's a possibility. And then finally, if we come down here to valuation, again, I've pointed this out many times. This 4681, this would be fair value on the S&P 500. That's 20 times earnings. Right now, we're at 68.70. We are so far above 20 times earnings. And if you see, if you look back here, this chart goes back 10 years. It does revisit the line from time to time. And right now, this is the highest it's been away from that line in 10 years, certainly. So just something to be aware of. So anyway, but for the time being, we are, like I said, in a nice rally there. We have gotten into a sideways market here for several months, and that can result. I mean, the last time we did that, you see here, we did have a move down. And here's another one here right before 22, it went sideways. So it's something that you do see when market starts to top or test down. And even if that tests down, we could go to 6,500 and hit support there, or 6,200 wouldn't be the end of the world for it to happen. But just something to look for. If I were in a really aggressive portfolio right now, I'd probably look to just play a little bit more defense. So anyway, I hope that's helpful and informative. And I'm going to put up our contact info. If you have any questions or like to hear more about how we're running portfolios, just reach out anytime. There's our contact info. Otherwise, hope this was helpful again, and we'll see you at the next update. Thanks for watching.